Hello, everyone, and welcome to another edition of the Forex Technical Market Update. Today, we had the non farm payroll report, and the report was fairly good, and the US dollar rallied on the news. Now, it's often good to look at the blank chart to see what is happening in the market, so you don't have any preconceived notions, old trend lines, etc. It's good to sometimes just delete all of those and take a look back. And what we see is that the market challenged a trend line. We can draw a trend line here. Market challenged this trend line and initially sold off from the challenge. And this is what happened on the non-farm payroll. So we have a downtrend line and we have an uptrend line. So we are in a mini consolidation pattern with the euro versus the US dollar. This is the daily chart of the euro versus US dollar. And also, what happened, as I said yesterday, was that the market went up to the monthly pivot point number and got rejected downwards. As you can see, the monthly pivot point was at 113.65, and the market sold off even before the number, and the number came out at this candlestick, and the market is selling off. What's of concern to the bears is that the market is not going below this 111. It's not closing below this 111 mark, and this is where support is in the market. As you can see, this swing low. We have a swing low right here, the 111 mark. The market came up, came down, and rallied up, and the market is at this point is not really closing below this level. It closed below it on the hourly chart, but for closes, we like to see the 4-hour chart. Is it closing below that level? And then if it closes below level on the 4-hour, we ultimately would like to see it close on the daily chart. So we're in a consolidation pattern with the euro, and as we have been saying over the last couple of weeks and months, that consolidation patterns can present opportunities for us, because when the market does break out of these patterns, the break can be fairly powerful. Okay, so for the euro, this is exactly what's happening, and the clues as to where the market will go depends on the break of these levels. And I will say the critical levels here for the longer term is this 108 level. This for a longer term move, this swing low, and this swing high near the 115 level. If the market breaks above this 115, we could see further gains and the market rally a couple hundred pips. If the market closes below 108, we could see a retest of the ultimate low at 104. Okay, so that's what's happening in the euro. Taking a look at the gold market, yesterday we spoke about the channel, and the market is attempting to close below its resistance level. Gold is down on the day after that non-farm payroll report, but for the market to experience further losses, I would like to see it close below the swing low of 1170. It's currently at 1170, trading at this 1170 level, and would want to see a daily close. And if the market closes below that on a daily basis, then 1140 would be the next area of support. Taking a look at the Australian dollar, we are challenging the low at the 76 area, and this 76 area is acting as pretty strong support in the Australian dollar. A break below 76 and a close down to 75 would be fairly bearish for this market, and that will indicate to us that we could have further losses in the Australian dollar. So the momentum currently is to the downside in the Australian dollar, and we could be setting up, if this 76 level is defended successfully, it will set us up maybe for a rally to the 80 level, but we'll just have to wait and see. For our portfolio members, we are still in this British pound Australian dollar trade, the market dipped and has rallied back up to these new highs, and I'm looking for a break above this $99 level to see if we can get further gains with this trade. What happened is with this trade is that the market rejected this $2 level, and we took some profits of a couple hundred pips, and now we have re-entered the trade, and we're looking for a break above the $2 level. For our portfolio, Japanese yen, British pound, we are in this a couple, I would say we have about 800 pips in profit on this trade here, and our members are enjoying it. Now, 800 pips in profit means really, what does that mean exactly? Not everyone will be trading standard lots. There are folks that with small accounts that won't be trading standard lots because we do practice good risk management and responsible risk management. So when I say 800 pips, that doesn't mean everybody will be making 800. Everybody will make 800 pips, but it's not standard lots. Some folks' account will be the trade size maybe 0.1, 0.2, 0.3, 0.7, 1 lot, 2 lots, 3 lots, depending on your account size. But for our members, we are up well over 800 pips on this British pound Japanese yen trade, and that's working out fairly nicely. Now, support in this market is currently at the previous high of, I would say, roughly 190. That's where support is in this market. And you can see that the Japanese yen is also rallying to new highs versus the US dollar. And that's giving our trade versus the British pound some momentum still. So I'm looking to see if this market can rally further, which will be very good for our British pound Japanese yen trade. Okay, taking a look at the British pound itself, we see the market challenging this 152 area of support. So we have support, medium-term support at 152 and longer-term support at this 151 level. And if the market breaks down below 151, that will be fairly bearish for the British pound, and we could then set up to challenge the 148 level. If this level holds at 150.91, then that could set us up for a rally attempt with the British pound versus the US dollar. Okay, and I have been receiving some questions about this technical market update and its predictive power. Now, what the technical market analysis is it's designed to analyze what's happening in the markets, not necessarily to predict what is happening. We put on trades based on evidence of probabilities. When we have certain indicators lined up, we will put on trades that we believe more than likely will work out in our favor and give us the best opportunities for profit. That's why we do this technical market update. We are not attempting to really predict the future per se. There's a misconception out there that to be a good trader, you have to be good at predicting the future. If I was good at predicting the future, then I would go and buy the lotto numbers, because I would just predict the numbers and boom. But this is a market analysis giving probabilities of what could happen in the markets, and then putting on trades based on those probabilities. So I hope that cleared up the notion that we're attempting to predict, because sometimes the market does not go in the direction that we anticipate, and then what does that do? That's how we get losing trades, and there's nothing really wrong with losing trades. The key is to keep your losses small, and when the winning trades come along, you milk those winning trades for all that they are worth. and that's where the big money is made in the markets. And if you're afraid of having losing trades, then I would say that you need to rebuild your confidence in trading, because there's nothing wrong with losing trades. Every great trader has losing trades. Some of the best trading systems I have seen personally have only a 40% or 50% win rate, but they still make a lot of money. So I hope that answered that question, because we have been getting a lot of those types of questions over the last couple of weeks. Okay, if you want these signals sent to your brokerage account automatically, then you can click on the link below and register. And what will happen after you will register is that you will get instructions how to connect the account, and connecting the account is fairly simple. Once it's connected, you can just sit back and watch the trades being performed live in your account. Thank you very much. It's Friday, and I hope you had a good week. You have a good weekend, and we'll see each other next week. Thank you very much.